China is the world's second biggest economy. It's extraordinary that it's the second biggest economy about which we can't really agree on what is even going on. I mean, imagine the debate about the US, where people sort of argue about 0.1% in a GDP growth rate. In China, you have serious people say the economy is growing at 7%, and you have serious people say the economy is growing at less than 4%. We simply don't really know. But what happens in China will have an enormous impact on what happens in the rest of the world. Now, for what it's worth, I think China is in the midst of a secular shift away from investment and export-led growth towards a more consumer-driven economy. That transition generally means slower growth. It's a transition that they aren't doing as fast as they probably should be. China's also suffering from the aftermath or the hangover of a huge increase in debt. They need to clean up their balance sheets. They need to restructure their state-owned enterprise balance sheets. They need to clean up the bad debt. But the good news is that they have the fiscal capacity to do that. And so the question on China is not can they do it, but are they able to do it in a way that is not too bumpy? And the big change, I think, in everyone's perception of China in the last 6 months has been that we used to think Chinese technocrats were completely brilliant, and we sort of assumed that they could handle everything. And the handling of the stock market, the handling of the last 6 months has given everybody pause for thought, the handling of the exchange rate. But my basic view is that China is going to have slower growth. That transition is going to take longer than one might expect. But China's economy is not about to collapse. So if you have China's economy not about to collapse and America's economy reasonably strong, then the underpinnings of reasonable but not great global growth are there. But the problem is, I think, in a lot of the rest of the emerging world, where the credit bubble in China basically fueled a commodity boom which masked quite a lot of underlying problem. So if you look around, Russia is, I think John McCain is right, Russia is a gas station masquerading as a country. Russia is really a huge economic mess, and I see little positive there. The really huge disappointment is Brazil. Brazil, I'm afraid, a country which we're sort of, like this on Brazil. We bought into the Brazil boom, we put Brazil on the cover. We really thought this country had changed and it was fundamentally going in the right direction. And now if you look at Brazil, it looks to me like all the old problems of Brazil, a bloated state, an unwillingness to really reform, were masked by a credit boom and masked by high commodity prices. And now we've realized, as wasn't it Warren Buffett who said, when the tide goes out, you see who's swimming naked. The Brazilians, I guess, I don't want to go any further, but Brazil is not looking good. And Africa, I was interested to hear your colleagues earlier. Of course, Africa has brilliant demographics. There are some really exciting opportunities in Africa. But a lot of African countries are going to be hit very, very hard by low commodity prices. Look at Nigeria now. Oil prices in the 30s do not bode well for economies like that. And I see no reason for the oil price to surge anytime soon. And we can discuss it a bit more later. But I think shale has put a ceiling on the oil price. I think the Saudis have no desire to hold back on production in order to push up the oil price. So the oil price stays pretty much where it is. Maybe it goes up $10 a barrel or so, but not enough to transform the prospects of countries in Africa that really have relied on high commodity prices.